I ran a brokerage shop in California for 15 years. And then when it was better to be with a direct lender, I ran a net branch office for a mortgage bank. So I'm going to go wherever I can get the best deal for my clients.
Welcome to another edition of Tuesday Tips with Brent and Lee. If this is the first time you've been to my channel, my name is Lee Bricky, and on this channel we talk real estate, mortgages, and money. And on Tuesdays we talk mortgages and real estate money with Brent Starts from Unitas Lending. So Brent, how you doing today?
I'm doing great. Lee, how are you?
I'm doing great. Now, before Brent and I get started, if this is the first time you've been to our channel, please don't forget to slap that subscribe button, ring that notification bell so you don't miss any of our real estate tips and tours. We put videos up every single week, and you don't want to miss them because we keep you updated on the market in Port St. Lucie, the Treasure Coast, and Palm Beach County. So today we're talking about the differences in using a mortgage broker than a direct lender or a bank. Many people right now, people are really experiencing these high interest rates. And so, where are you going to go right now to find the lowest interest rate? Because when we had the low interest rates, it really didn't matter for those couple of years when the Fed was buying back bonds. But now that interest rates are starting to go up and the market is, what would you say it's called, Brent?
Almost a correction, really, because they were artificially low, really,
right.
Because of all the bond buying that was happening and interest rates basically virtually at zero. The Fed funds rate was, 0.25, so essentially zero.
Right. And so when we were selling new construction, we were telling our clients, hey, you don't even worry about shopping because you're going to get the same rate you're going to get anywhere, right from the lender on the new property. But now we've experienced several deals here recently where people are buying new construction and they're coming to you from our channel because they're unable to lock their mortgage for more than 30 days. And when they do lock their mortgage, it's very, very expensive for them. Also, we're finding that the lenders are not giving the same rate as you're able to do. And we're also finding that they're not taking all of the income, especially a lot of these people now who are working from home. They're getting bonus money. They have they're in sales, and part of their income is their commissions. So there's a lot of factors going into these loans right now, correct?
That's absolutely right. Absolutely.
So tell us the difference in a mortgage broker, because, I know 5 years ago, you and I have been working together a long time, but, I remember 5 years ago it was, hey, everybody was using direct lenders and banks. And then all of a sudden, these two big companies jumped up, United Wholesale Mortgage and Penny Mac, and they only work with mortgage brokers, and it changed the game. So kind of explain what happened there.
Yeah, that's a great point. It has changed. And, I ran a brokerage shop in California for 15 years. And then when it was better to be with a direct lender, I ran a net branch office for a mortgage bank. So I'm going to go wherever I can get the best deal for my clients, right? And be most competitive. And so what's happened is the pendulum swung back to the mortgage broker as having the benefit. And so we started that about 5 or 6 years ago. They have lower rates. And the way they do that is we actually run lower cost margins. Our costs are much lower than a bank branch. In other words, if you drive by a retail Chase Bank or Truist Bank, they're on multi-million-dollar land. I don't have that. I've got a small office, and that my expenses are very low. So we actually sell to wholesale lenders. So they buy whole loans from us. So we take that, what you're seeing, the glass doors and offices in a bank branch, those expenses and chandeliers and marble floors, multiple layers of management. We don't have that. And so what we do is we can deliver to a wholesale lender that you won't find on a busy street corner. They buy whole loans from us that were done, completed, and ready to fund.
So Brent, talk a little bit about credit overlays, because we hear a lot about that. And I know you talk a lot about that. And that's something I don't think people really understand, a credit overlay and how that affects their rate with a traditional lender like a bank or a direct lender than it does with a mortgage broker like yourself.
Yes. Well, first of all, we don't have credit overlays. Those are bad things. What they are is uh, certain banks and investors have an appetite for certain credit profiles. So we'll see a situation where a borrower is turned down with a 660 score because the bank requires a 680 as a minimum. We can go down to a 580 FICO score with just 3.5% down on an FHA loan. So those loans quite often are fundable with us, where it's just a turn down anywhere else. And so what we do is we know where to take those loans, who has the appetite for what types of credit scores, income profile, and that way avoids additional credit pulls, hard credit pulls, and multiple denials, which hurts your credit profile.
Right. And that's something that people are already concerned about, is getting their credit pulled multiple times,
Right.
trying to find the right lender. And the other thing, in real life scenario here is we've just dealt with two situations that we can basically talk about, which are, one had very good credit and bought new construction. The lender for the builder was wanting $30,000 more down because they wouldn't take a sum of her income. And then the other thing is, you were almost was at least a half a point, almost a point less on the rate, correct?
That's correct. So much better pricing, much better rate, and we were able to use that additional income. So those types of things, some underwriters will accept certain things, others won't, and some are, more forgiving even when it comes to income. So we were able to work that out. But also on that specific transaction, the bank was not able to lock the loan out as far as it needed to lock to ensure closing, because the debt ratio, frankly, wouldn't have qualified if we weren't able to lock that loan outside of 60 days. So that actually saved the transaction for this particular borrower, which sold an out-of-state property, by the way, and needed to move. So having that flexibility definitely can pay off.
Right. And she would have lost probably, I think, somewhere around $338,000 on her down payment, because the builder, if she couldn't have closed, would have kept her escrow deposit. So all of these things really are important for people to understand when they're looking for a lender. And another deal we just did was, they got turned down by every every investor that you have, except for one who, that lender had an appetite, I guess we could call it, for that deal, correct?
That's right. That's right. That was a continuity of employment situation where that's a judgment call. So, frankly, we have relationships with our lenders and underwriters where we can, with a letter of explanation, show that these borrowers basically had stable employment for years, but they'd had a very large gap. 6 months, in fact. So that was a difficult thing for some underwriters to take. But one of our investors, and we can do this by phone without, having all those credit, hard credit inquiries, which is helpful as well. But we were able to get that closed up for them.
Right. And also talk about, you have different program options for buyers also that a bank or a direct lender wouldn't have.
Oh, absolutely. I mean, we have loans where we can actually use bank statements as income, and that's just unheard of at a bank. They never do that. So if we look at someone's 12 or 24-month bank statements, and we can look at their deposits, and that's what's considered income, along with a letter from their CPA stating what their basic expense percentage is as far as their compared to their gross income. So a lot of times we're able to get loans funded in that way as well. We can't count things like room rent. There's ways people make things work. And so what we do is we just have a very candid, transparent conversation with the borrower and say, make sure that they're able to afford the loan, and then find a way to make it work that works for them.
Right. And that's a big thing. When we're not putting people in houses they can't afford.
No,
But we've
ever.
done some, over the 8 years we've been doing business together, we've done some pretty amazing things with your investors and getting people in homes that no one else could have gotten them in.
That's right. Well, on self-employed borrowers, somebody that starts a business, but they own multiple properties and they found a transaction that makes a lot of sense. It cash flows. We can actually fund a loan on the DSCR, the debt service coverage ratio loan, where if that loan is a positive cash flow and they can put the 20% down payment as security, then we're good to go on that. So we're not going to look at, hey, did your business happen to lose or make money? You may have had a bad year, but now you're back on track. And we'd have to typically we'd average the last 2 years of income, but maybe the last 2 years don't look that great because of COVID. But you found a great property that cash flows, and you have the down payment. We're able to fund that deal so you can get that cash flow.
Right. And then also, if someone's denied with their lender, or they're out there with Rocket Mortgage or any of these companies and they get denied, that doesn't necessarily mean they can't purchase a home. They should absolutely reach out to a mortgage broker like yourself, correct?
Absolutely. Absolutely. And I think, one thing is worthy of note. If we, let's say something, the underwriter sees something that they don't want to see, we can actually, we're not dead in the water. We can go to other investors. If you go to a bank and they turn you down, that's it. That's it. We can actually take that same profile, the same credit report, the same scenario, the same appraisal, and make sure we can get that loan closed elsewhere. A lot of times we run with our, the lenders with the best rates typically have the highest credit standards. And so if we think that, and 95% of the time we hit it spot on and with the first investor. But if we are turned down, in the event that happens, we can always flip it to another investor seamlessly.
Right. Now talk a little bit about VA loans, because, there's a lot of companies out there that, push to do VA loans. There, we see them on TV all the time. So talk about some of those lenders and how you stack up against those.
Well, a big thank you first to our vets. We love to do VA loans for our veterans, and a lot of times these VA loans, a lot of times there's different credit standards, there's different appraisal standards, and a lot of times those offers are just tough to deal with right now as far as the market you find yourself in, Lee, because they feel there's it's more difficult. There's zero down, that type of thing, and so we're very competitive on those. But we actually help work with you and work with the seller to show that this is going to close as seamlessly as a cash offer, essentially, because those guarantees, those VA guarantees are priceless. I mean, it makes it a very profitable loan for the investor that purchases that loan, and that VA guarantee really improves the pricing. So all day long, we can be the best priced out there as far as rate for a VA loan.
Right. So let's just talk about the elephant in the room too, right? Since we're on this this video, rates have gotten out of control. I mean, last week, we were in the fives, and
right.
So I know that there's a lot of skepticism out there with buyers right now on where these rates are going to land, and where do you see this starting to settle down at? Do you think we're going to see some settling here in the next few months?
I do. I think that the inflation messaging had radically changed from transitory to it's out of control over a course of about 2 short weeks. When the markets got a hold of that, I think the pendulum swung too far over, and there was an overreaction to it, where we were looking in the 1.8, 1.9 range on the 10-year Treasury, which is kind of a rear view mirror look at where things are. But that ran up over 2.5%, and that was really the target the Fed was trying to reach, that it wouldn't go over that. That the increases on the Fed funds rate, which is different, that's the quarter point hit. We heard a few weeks back, they're projecting as many as 8 hikes of 0.25% each or more. And so, that pretty much got baked into those rate sheets where we hit almost 5.5% on a conventional loan, where we were sitting, in the low threes just 2 months ago, or less. And so that was a very, I don't think the Fed anticipated how quickly the mortgage market would respond to that. Typically, rates go up much faster than they come down, but we saw kind of that knee-jerk response was up to 5.5, and now we're back in the low fives right now this morning. So I see, as things start to slow down, as the numbers start to show that the economy's moving towards a possible recession, I think that what we'll see is those rates kind of start to come back down a little bit, because we need that. Housing's a big part of the economy, and we need to keep it healthy and keep it rolling. I think I'm looking forward to it, because I think it'll be a healthy market. The frustration borrowers were seeing, buyers were seeing, with 20 offers on every property within hours. I think we'll see somewhat of a normalization of the market, and rates kind of hovering around the high fours is probably where we're going to see rates kind of land here by the end of the year.
And then, what do you think is going to happen if we hit with rates, if we hit a stagflation? I know you've been through stagflation before, because you've been doing mortgages so long. So what do you see happening if we start rolling into a stagflation situation? Because, we've got the war in Ukraine, we've got gas prices through the roof, we've got food prices through the roof. I mean, people are, really taking it on the chin right now with everything going up in price. And now we have rates going up in price. So where do that? I mean, I'm getting a lot of comments and a lot of clients asking me, hey, do you think, we're running into some stagflation here?
That's a great point. And that's to give the definition, that's when the economy is slowing down, but there's inflation. Prices are going up as the economy is slowing down. People are making less money, et cetera. And so, I think that's kind of, obviously it's a bad situation to find ourselves in. And I think, they have to fight inflation, but at the same time, keep the economy moving forward and people working. So I think, some of this is policy driven, frankly. I think that, the midterms are coming. And I think that, we were energy independent a few years ago, and we could see, the big difference at the pump. And I think that's where it hits middle America, guys like you and me out there that are working and raising a family. And I think that, if we can bring the pricing of gas and fuel down, I think that'll be a big help. And I think the Fed's kind of walking a tight wire right now. They really are. And I think that they kind of over telegraphed, if you will, the rate hikes. And I think that the market's over responded. And I think we're already seeing a pullback, and hopefully we can kind of settle into rates are still very low. Historically, we have to remember that too. Historically, rates were in the 12s on average in the 80s, you know what I mean? And so I think you've shown that graph before. And so historically, rates are still extremely low. And I think that if we settle in the fours, that's a market that we can function in and do business.
The problem, I think, is though prices are so high with homes right now, and they're continuing to go up. And with rates going up, we have a housing shortage, and it's a housing crisis now. We're here in a housing crisis. One of the Jeff Smith has a YouTube channel out in Huntington Beach, and one of his videos was the worst market he's ever seen. And I think it really is it's just a really tough market for buyers, sellers, and real estate agents. We're for everyone trying to work together to put people in homes. And especially here in Florida, we have so many people moving here right now that it's tough. It's just a crisis. It's a tough market, and it's a crisis. And I just I want to answer a couple of questions. I got a question the other day from a buyer who's moving to Florida. They put their house on the market and it's not yet sold. How far out do you suggest that people get with you, even if they have perfect credit? Go ahead and get with you to get a mortgage started if they're planning to move.
Oh, I think 6 months. I think the sooner the better. we can get them some ideas as far as, payments and down payment, what to expect. They have plenty of time to get their credit in line. We can make suggestions and pull their credit. And basically that inquiry will kind of season off, if you will, where it really won't be considered, but we can know where the vulnerabilities are in the credit report, what you might want to pay down. And we can do what's called a what if scenario and say, hey, if you pay this down $500, your score is going to go up 20 points. And that can make the difference, tremendous difference in the end rate, the interest rate.
Right. And the last thing is, I got this great, it's not my client, just he's been communicating with both of us. He's purchased a new property, and he sent me an email today, and I'm going to respond to it, that, what can I pay you for an hour of your time to talk to you? Or, I want to just make it clear that we're here to help people. This site was not meant and created so that we make money off of it. We appreciate all the business we get from it, and we love everyone who subscribes to our channel. We've created a community here with this channel, and we can continue to keep going with it. But we're here to answer your questions, help you any way we can. If you have a real estate question and you need it answered, and we're not going to be the people that you deal with, that's okay. Hit us with your questions, comments, email us, text us, reach out on the phone. Our information is in the information section below, but Brent and I are here to help you any way we can. This is a public service for us, as well as a way to communicate with buyers and sellers in the market where we're doing business. So always feel free to ask us anything. Do you agree with that, Brent?
One of the things I say every day is consider me a resource.
Exactly.
And because, we've got years of experience in this business, and it's a big decision. And I think, to have the knowledge that, we've gained through all the years, and we can pass that along, it's a blessing to us as well, to be able to help someone. It just, feels good. At the end of the day, all this won't be here. I
Right.
think that, that's in my belief system anyway. I believe it's yours as well, Lee.
Yeah.
That there's a bigger purpose in all of this than, homes are obviously an extremely important factor in people's lives. It's where they raise their families. And it's largest line item in most people's budgets is their home and their housing cost. And so we want to make sure we minimize that so they can spend money and time on the things that are most important with their family.
Yeah, and I'm going to give a little plug to my brokerage. This is the reason why I moved to Real Broker. It is that this is the culture. We just had a Zoom call this morning that I jumped on, and this is the culture of the real estate agents in this company that have social media platforms where they're just doing things to help, doing videos to help as many clients as they can, as many buyers, sellers as they can, but also real estate agents are plugging in, listening to it, that are getting started. And there's no one's asking for anything back. It's just a great culture. So if you're in a market somewhere and you need a real estate agent, please reach out to me, because I will assure you that there are no better agents on the planet than a real agent right now. And that's why I moved my business over here to the Real Broker. So I've never really plugged it, but I'm plugging it today because this is what it's about for us. So we're going to wrap it up. Please, if you have any comments or questions for Brent and I, leave them in the comment section below. We love to answer your comments and your questions. Also, if you haven't subscribed yet to the channel, don't forget to hit that subscribe button right there, ring that notification bell so you don't miss any of our real estate tips and tours. And you can watch our next video about the market and what's happening right now with it right there. Be kind to each other, and we'll see you next time.